with that, copper, which tried to run up, which had a nice run up last night, is now lower on the day. Seen pretty big profit taking, and I know Judd, you and I chatted a little bit about the gold copper. Now, I don't know whether you said to them that when I look, and Angelo, don't jump through the microphone when I tell you this, but the IMF is being pressed to do a lot here. Now, I know the way that I would do it if I was them, but they're not going to do it that way because they're going to have to raise a lot of money. And you know what? States are not going to be forthcoming with a lot of money because they're trying to shore up their own fiscal situations. So I'm wondering whether we're going to see the IMF announce some type of gold sales with gold up here at these prices. They missed it last time so that they can raise cash. Now,
Ira, so I'm looking at this gold copper.
yeah, I know.
I got it up, and now when we spoke this morning,
Gold was down about $6 and copper was still a little higher.
yeah, and it was just starting to do this ORH pattern.
Mm-hmm.
And now it's at the 200-day.
Yeah.
And
Okay.
cloud stuff. So I think that's over. I think what you're going to see now is you're going to see the copper got close enough to the next matrix level, so that I think that the copper bounces.
Well, again, as we talked about this morning, it's like with the way that I'm looking at the platinum here, especially when I saw the yen. The yen was interesting this morning, right? Because
Yeah.
they didn't do anything, just as I suspected, and yet. But Kuroda said something very interesting in his post. I don't know whether it was press conference, but he said it, that there was deflation still in Japan. And that's my point when people say, well, the yen, but in real yield terms, if Japan is in deflation, which is not necessarily a very good thing at this point in time, it does give you a real return on your money. Unlike, you know, I've followed all this bond conversation this morning. I mean, it's just all over the place. Ambrose Evans Pritchard had a great piece out last night on that the bonds know more than the equities do.
Well, we talked about that early because the bonds were right at the quarterly pivot. You had the euro up at that major level, and you had the match in the SPOOs. So you had three of those markets lining up.
Yeah, but again, and everybody's making a big deal that the bond prices, and even Pritchard, that the bond prices are reflecting that the Fed's not going to be successful. Okay, listen, there are some great minds, including Lacey Hunt, who I have the utmost respect for, who believe that. But then I turn around and I read Bernanke's piece this morning, and Bernanke is certainly the godfather of what's going on right now. They're going to throw everything at it. And now in the Pritchard article, he quotes Myron Scholes. It's a good, if you can't find it, let me know, but somebody should post it. And he quotes Myron Scholes at the end going, the velocity of money, that Friedman was wrong about the velocity of money, and you're not going to, if it sits in reserves, it's not going to be working, and it's not going to be creating this inflationary pressure that people are thinking about. Well, maybe not, but they're going to keep throwing so much at it by their own admission. And that's, so even if I thought inflation was going higher, I can't make any money selling the bonds because the Fed's going to be buying bonds, right? I don't know why people understate that. Until the market is willing to take the Fed on, and again, we can go back to Japan and we talk about the Widowmaker, because there were some very powerful forces who were trying to take the Bank of Japan on, 20 years ago. But they were wrong because Japan actually had real deflation. And that's why, to me, the dollar, and how long have I been discussing in this room? 6 weeks, 7 weeks? That, and when Trump made his major mistake by talking about a stronger dollar, the United States can actually do something about the dollar. It was very difficult for the Japanese to do it, although they did weaken it when they wanted to back in, when they got the okay from the world back in October of 2012. But if the dollar were to really start to weaken, the natural inclination would be to sell bonds. But I don't know. This is going to be one interesting time.
Well, Ira, do you think maybe we're already, in a de facto yield curve control world in the U.S.?
Well, yeah, by jawboning, Angela, and that's a very good point. And that's what the Fed is actually bragging about. Well, everybody's talking about the balance sheet has actually declined to under 7 trillion. I'll say it again, 7 trillion. And people are making a big deal of that. But it's only doing it because the Fed is jawboning the market, and it has the market so off balance that they can get away with doing nothing for the moment until the market comes to test them. The Fed has not really been tested. The only time was the taper tantrum, and where the Fed should have allowed it to continue. Of course, Bernanke panicked, and that was the end of that. And then we saw Powell, who was getting there, but then by January 2019, after the terrible fourth quarter of 2018, he pivoted and ran with his tail between his legs too. So this is going to get really interesting here. When? Can't tell you, but it's, it'll be, will the market take the Fed on? I doubt it, because there's nothing there. Look at, I think I'm a good barometer of that. And there's just nothing here. There's no money to be made in the debt markets, on any type of positioning.
Ira, Jim Bianco was talking about that point yesterday.
Yeah,
he thinks,
where was he on TV or something?
No, it was a private kind of thing. But his point was, he thinks that the markets will probably start testing the Fed, but it might be a 2021 time frame. But he said, it could probably happen the moment the Fed finally announces that they've met their 2% inflation target, right? And then all hell breaks loose.
You know what? That's a really good point, and I certainly respect Jimmy B a lot. But you keep hearing him say this: they will let inflation run hotter for longer, right? Because they'll do a stochastic, smoothing out of the last 10 years of it under. So okay, so if we, and I locked up with somebody in an FT thread this morning, or starting yesterday. Judd, I think I sent you that. Go read that. That was the piece on the dollar. And again, Angela, we come to December 2020, and I still pose that question, and I'll pose it to Jimmy Bianco, and I'll pose it to Book Bar, and I'll pose it to the entire group who's in that camp. Going, look at, if inflation is 6% and unemployment is 9%, does the Fed raise? And you go, well, that's really not an important question. And I go, yes, it is. Because in order to keep rates low, they're going to have to buy massive amounts of paper. Right now, they're underbuying. We know that. We know that.
Yeah.
I think the next leg, and if you follow was that Alexandra who posted that?
Yeah.
Okay. So if you follow Bernanke's logic, and I think that logic is right, and the Fed they've already approved the what is that called? The municipal market liquidity. And how much will they come with there? I think they're just stalling for some time, and they're thinking that they may have to come up with $1 trillion to $1.5 trillion to buy all the muni bonds that are going to be out there. Now, you should probably start watching, and I don't have them up on my screen. It's one of the few things I don't have up on my screen. But one of the things one of the things we have to do is we have to start watching those muni bond ETFs. And I'm not a fan of ETFs, but there's not enough transparency in the muni bond market by itself on the individual offerings to give us what we're going to need. But start watching those, because if the Fed is going to do that, just like, HYG and Liquid and those all went bid when the Fed announced that they were going to be buying corporate bonds. Now the muni market already knows that the Fed has been approved to do this, but we really haven't seen them in action. They've only bought one municipal piece, right?
Judd, MUB would be one of the bigger ones.
Okay, so the only piece they've bought so far, right? And they've been approved up to $500 billion. They've spent $1.8 billion buying which states munis? Illinois. That's the only thing they've bought. But if you follow, as Alexandra posted the Bernanke piece, and I'd like to hear her pipe in on this, but what she drew out of that. So if that's the case, and now we're going to come to a huge revenue shortfall in the states, the Fed is really going to have to get busy buying munis.
I mean, Ira, I don't think Bianco was making the point that that would be the moment that the Fed raises rates. What he was saying is that that's just the moment in time where they lose control of inflation, and it just ends up running hot. And maybe the bond vigilantes just say, "Screw it, we're just selling all of our bonds to the Fed."
Okay, but you're not going to move it. So it's going to sit there. We've seen this in Japan, and we've seen this in Europe. But certainly in Japan, again, the widowmaker. And in Europe, even when it looked, even when Salvini, when Five Star and the League, and when there was all, what did yields get back up to? I don't know, Judd. What's that? We're going back 3 or 4 years, but we probably got back up to about 2.8, 2.7 on the Italian 10-year. That's nothing. Back in 2012, we were at 7.5. So, and then you got crushed because it rolled right back on you. Why? Because the ECB was in buying everything they needed to. And in fact, what really distorted that market is that Draghi said, yeah, we adhered to the capital keys, but not over a period of time when we can smooth it, but not on a day-to-day basis, which meant that they could basically buy all the Italians they wanted on any given day, and good luck to those who were pushing it, trying to push it lower. Because it's kind of hard to, when that's the immovable object right now. Will that change? Yeah, it'll change, but I'm not going to, you know what?
It was even more prevalent in the Bunds, Ira, when a couple of those expirations, the Bunds were what? They were trading at a 200 discount. They went 500 negative.
Yeah.
And with a week and a half to go before the next roll, they rally 500 points.
That's right, Judd. But see, with the Germans, though, that has always been a different animal, because the Germans with the Schwarzschild, which is Michael on?
I don't know if he's in.
Okay. But under the Schwarzschild, which they've now pushed back, or the black zero, that they were always going to be in balance, and actually they were running surpluses. So there was actually, just like, back with the United States, when the United States during the Clinton years, ran those massive surpluses, budget surpluses, there was a lack of German bonds. And it was doubly important because in the European repo, the German bonds are the most desired because they're the highest quality. And when there are none, that puts that much more pressure. And because of those capital keys where they had to buy on a pro rata basis, it created an automatic shortfall in the European debt market, which is why I argued very openly, once with him directly, but through Santelli, with Gunlach and Bill Gross, when they were talking about being short bonds as the tradable, the greatest trade of a lifetime. And I said, no, that's a silly trade. I'd rather sell French oats, Dutch. The last thing I want to sell, if I could have my choice and I'm being short euro-based bonds, I don't want to sell Germany because there's an inherent imbalance favoring Germany. That's, and when that discussion was going on, the French-German 10-year yield differential had narrowed into about 16 or 17 basis points. Right now it's sitting at 31, which is pretty narrow. But I said, sell the French. Why would I wouldn't sell the German. But whatever. And you know what? It proved right because that flew out to about 55 when there was some, with all the stuff that was going on with Italy and people were again, anytime that people are nervous about the existential nature of the euro, those spreads, of course, widen out.
Ira, do you think the German court gets any kind of response next month from the ECB?
No, I think that they've now backed off. They've been placated. And again, it's the importance of Schweibel. And you know what? And I don't think that Michael disagreed with me about that. We don't hear enough about that. I think that right now they've been placated. And the fact that the Bundestag, which is the taxing and fiscal authority, which is what they were really adhering to, they did it through the rules of proportionality. But I actually bothered to read some. I don't read German, of course, but I read the translation. And that was really what they were getting to. So they were looking for somebody to come and basically save Wiedemann. And I really believe that was the real significance of Schweibel making that move. Because when the legislature, signs off and gives its approval, how can the court disagree? That's what the legislatures are. That's the fiscal authority that's embedded in most legislatures.
Do we even know who the specific parties are that filed that suit?
Oh yeah. And now there's a new one coming again. And this one I think is alone by some of the big stalwarts in the Alternative for Deutschland. So, but they're losing support because it's hard to support it when the legislature is promoting it. And they're not going to, Merkel is now, again, risen like a phoenix. And now that she's head of she's president on a rotating basis for the next 6 months of the European Commission, she has a lot at stake here and she's pushing hard. This weekend is a pretty big weekend following the ECB because, the more I read about Rutte, I don't speak Dutch, but Rutte, who's the prime minister of the Netherlands, who's been leading the battle of the frugal four against a common euro bond for the pandemic bailout. He's doing it because he has a lot of domestic political issues, and he's afraid of the far right rising if the Dutch take a too pro-Europe stance, and there's nothing more pro-Europe than a unified bond. So, but Merkel's going to have to cut his legs out from under him, and I'm sure she's doing it quietly. In fact, there's a really good piece by David Marsh entitled, and David Marsh is nobody to minimize. It's on the OMFIF. If you don't read, you can get it at Forex Factory. It was on there yesterday. So if you scroll back, but the he's the chairman of it. interesting work that they do. Very good work, by the way. Let's see. Hold on one second. It's the OMFIF is the official monetary and financial institutions forum. But he writes a piece that came out on the 4th yesterday. ECB pauses after easing sprint. And it's titled, and then the subtitle is From Growth to Governance, 10 Questions the Council is Pondering. And it's a really good piece. And David Marsh is really good. He wrote a book back in the 90s when I started following him called About the Bundesbank, which really educated me about the inner workings of how the Bundesbank worked. But it was a very interesting book. And he's very smart about the inner workings of the Bundesbank.
I'm just looking at dollar Canada here too, with the oil and everything else right at the top.
Yeah, you know what? But that was because of the bank meeting this morning. There were people who were actually looking again for increased QE from 5 to 10 billion. They didn't. I think it got. It halted for a little bit. And it didn't do anything, and all of a sudden, it started to rally. I kind of miss that. But we're stuck here in this range, which has driven me crazy.
Yeah, and it's got to show you something under 134.90 to even get going.
Yeah, right. Exactly. Exactly what I'm looking at some stuff at. So, but that's it's really going to be interesting time. And again, keep your eye on those European bonds. They traded so interesting today because the Bund was weak, and I actually sold some Bund as the euro was rallying. I go, wow, if this is right, the Bund, because there was a pretty good Bund auction this morning, but not outstanding. Yeah, what was the results? The Bund auction, they had a 10-year Bund auction. It was negative 46 basis points, and it was 1.8 times subscribed. So that's the same as it was as the previous one, but the previous one went off at negative 38 basis points. So, I mean, it was the Bund rallied, but then it fell apart because I think the pressure, it became, again, these spreads can compress if people really believe the pressure is off on the euro falling apart. So.
Actually, that was an interesting rate, Ira, because the Swiss 10, I think, was like at negative 50 basis points this morning.
Hold on, I'll tell you right now.
So what did you say? Negative 46, was it, on the Bunds, on the auction?
Wait, hold on. I got to go back and get it. It was negative 46. Negative 46, but I'll give you this. The Swiss this morning was, I don't have it. Usually I have it, but it's not on this sheet. Yeah, but it's probably right around there. Actually, the 10-year in Switzerland has been higher than in Germany. Believe it or not, for whatever it's worth. But
well, it's kind of what I'm driving at. It seems like the German bonds are catching up.
But look at what the Euro Swiss did today, okay?
Yeah, that was big.
Now, Angelo, you make a good point. But yesterday, Thomas Jordan gave a speech. He's the chairman of the Swiss National Bank, okay? And it's a 5-page speech or 4-page speech. And if I tell you how many times in there he talks about why they have to intervene in the foreign exchange market. 1, 2, 3, 4, 5, 6, 7, 8 times. And now I thought nobody was supposed to be intervening in the foreign exchange market. And he's very open about it. But I've yellowed them all. I've read the speech. I have it sitting there. But it is interesting, though, the movement, as I chatted with you before, Judd, that the Euro Swiss move, as Elaine Bennis would say, breathtaking.
Yeah, that's a big move.
Right? That's a big move on a day like today.
Yeah, and it's broken out on the weekly as well. It's above the 50 week moving average. You can see
Yeah.
it close here and actually extend over the rest of the week.
And that's with the gold hanging up, you know. So again, is the Swiss, after, if you read, I mean, all he did was talk down the Swiss currency because that's what they're focused on. Here, I'll give you one line. Our experience, and I'm quoting from Thomas Jordan. Our experience shows that foreign exchange market interventions and the negative interest rates are essential for a small open economy with a safe haven currency and a global low interest rate. In the margins, I by going, well, how many are these? How many of these countries are there?
You know, maybe Mnuchin doesn't know who Thomas Jordan is, or if he does, maybe he lost his phone number.
Oh no, he's got his phone number in his wallet because they'll move money together.
Yeah. Hey, listen, if you don't think that Mnuchin doesn't call him up and go, hey, listen, you know what? You know, feel free to buy stocks because we've got your back. Wink, wink.
Yeah, he don't have to. He's got a printing press. It doesn't matter whether he has his back or not. He's got all of. You know what he goes? I got all the money in the world. And you know what? He's right. Because as the currency stays up and people keep taking it again, this is the alchemy of forever. Gold may be.
Geez, Ira. My God, it just dawned on me. What if the Swiss franc was still floating? Do you realize how much in stocks they could freaking buy?
Yeah, unlimited.
Holy crap! That just dawned on me.
Ira, you need to keep your eyes, you guys, on this golden euros. It put in a lower low from yesterday.
And reversed, right?
Yeah, and if it starts getting above the averages here, it's trying to put an ORH day in.
Yeah. You know, it's kind of funky. But let's see. Hold on one second. I'm getting.
It's worth keeping an eye on late.
Fed Rosengren is out. Yield curve here. I'm telling you, I think they'll go to negative interest rates before they'll go to yield curve, to an official yield curve, right?
Yeah.
That's my bet, especially if the Fed wants the dollar lower. They may as well go to negative interest rates. As much as they hate it, they'll hold their nose. I see. Now I just got a notice from LinkedIn. 142 people looked me up. I go, how come nobody's got a job offer for me? I don't understand. I don't understand LinkedIn.
Oh boy.
So
well, then does that mean, Ira, that you want to be, I don't know, long treasuries, short the banks?
Whoa. Well, I'll tell you what. Excuse me 1 second. No, I don't have COVID. The banks have certainly performed miserably, right?
Oh yeah.
Can we agree with that, Assessor?
Oh yeah, absolutely.
I mean, it has been miserable, and I'm being kind.
Yeah,
they're miserable. They're miserable.
Morgan's high yesterday absolutely blew.
Yeah, it's they're just miserable. They're because they see exactly what we're talking about. So, you know, it's hard. It's going to be a lot. You know, that's why they were pushing the big banks for an easing off of the Volcker restrictions, except they got beat up by Leo Brainerd on the other side, and she had enough heft to be able to get that in, you know, for reduced dividends as well as removal of stock buybacks, so that they're building up their capital. And you see how much capital they've now set aside after the second quarter. So,
Well, Wells Fargo's got to reduce their dividend, which brings it down from the current, I don't know, 8.5-ish. It's going to bring it down to about 1.5.
You'll,
you know, I'm glad you brought that up because John Authers, who I like a lot, and I've been on, I used to be on with them quite a bit in London on the when they would do the closing bell because they would Louisa Borgenson, who I like, who's one of the smartest journalists. In fact, I had a conversation with her. I wondered where she went, but I know she had a baby and she took a lot of time off. But we had a long discussion because she's really, Kathleen Hayes were absolutely, to me, the most brilliant television journalists for doing the financial markets. Louisa was in London, and of course, Kathleen was at Bloomberg, still is at Bloomberg on radio. And she's really my favorite, really so bright. But we had that kind of, and Authors made a comment this morning in his piece about Wells Fargo, and he cited them, well, they've struggled since the mis-selling. So I sent him a note. I go, John, mis-selling? That's so not like you. I said, that wasn't mis-selling. That was identity fraud by any measure that I can imagine. Selling my ass. I am not a fan of Wells Fargo after they pulled that stunt with opening, I don't know, how many millions of fraud.
4 million, something like that, or more.
Huh?
It was like 4 million or something obscene.
So, yeah, who knows? By the time you couldn't get a straight answer. And the fact that none of them went to jail, meaning not the people in the branches, because they evidently got the call from high up that this is what was to be done, and nobody went to jail, boggles my mind. Boggles my mind.
And yesterday they missed on everything. But even though Wells is like the fourth largest bank in the U.S., they have the tiniest capital markets group. So and capital markets is what really buoyed J.P. Morgan, Citibank to a lesser degree,
Right.
but Goldman the most, because
Yeah,
obviously Goldman's still a capital markets bank.
Well, I always watch Goldman now to see how that Marcus takes off. Because again, I don't know whether we talked about this the other day with repeal of Glass-Steagall, but Goldman wants to open Marcus because they want to be able to really attach themselves to wholesale fund, meaning deposits in all these numbers. But you know what? So they're a hedge fund. Goldman's a hedge fund. It doesn't want to pay for the use of the money. They want basically free money because they'll have FDIC insurance. Well, my attitude is, okay, you want to open up Marcus? I'll give you money for 3%, 4%, 5%. And you have to disclose to me what kind of risk profile you're developing. Yeah. So, you know what? That's the key. Until that gets resolved.
Yeah, I mean, correct me if I'm wrong, but I think Chris Whalen still thinks that Goldman trying to go into retail banking is a mistake.
Oh, it's a gigantic mistake. I don't know. They're salivating again. Listen, they did it in 2008 when they, went and filed to become a bank holding company so that they could access the funds. So.
Yeah, and the best looking bank is actually looks almost PNC. From a technical basis.
Yeah, and Republic and what is that? U.S. Bank. That's who Whalen talks positive about. Okay, you know what? They're kind of sticking to their knitting. And
yeah, they both increased reserves sharply.
Yeah, because they're going to have some issues. Listen, it's why I openly say I like UBS so much, because UBS has gone back to what UBS is all used to do great before they wanted to become a hedge fund, posing as a bank, and they're managing money. And you know what? If you can effectively manage wealth, private wealth, Morgan Stanley went back to basics too. That's when they brought Gary Kaminsky back, even though Gary's long gone. But that's what the route they went. And you know what? It works. Know what you want to do. Know what you want to do. There's a lot of room in there. You know what? Goldman used to manage, when Goldman was a partnership, I had a lot of respect for them. I thought they really were, because they were fiduciaries for their customers. You cannot be a fiduciary for your customer when you're trying to jam product down their throats. Sorry, I just don't see it. Don't tell me about Chinese walls. I just don't see it. But when they were a partnership and it was their money at stake, they were fiduciaries. And more importantly, they were systemic fiduciaries. Because if Goldman passed on something or put the kibosh on it, it reverberated throughout the whole system. Now it's just, sell to your customers and, give them everything to choke on. Trump's already backing off on his sanctions against the Chinese.
Does that surprise you? All he does is go up there and look for somebody to punch in the face, and he winds up basically, frying an omelet on his orange face.
Well, as these guys who sent me the notice, and they're dead right on target, said, he's the ultimate paper tiger.
Yeah, he's just.
That is true. Mao would be laughing and, oh yeah.
Well, I like how the Chinese yesterday announced unspecified sanctions against Lockheed Martin for selling, Patriot missile stuff to Taiwan.
You know what, Angelo? I'm glad you brought that up too. I love that because again, when the U.S. media reports these stories, it's like, that's it. I'm going to tell you this. The world is far more dynamic, and this static model that everybody wants to work off of, that the United States is this, and this. I don't, it's one of the things that go matrix is I don't buy that. The world can always respond. And you know what? The Chinese said, hey, we're going to sanction your asses. So.
Yeah, and look at how Lockheed closed the day up. It's a huge engulfing bull, and then it gapped up today.
Yeah.
I don't think Marco Rubio's too upset about not being able to travel to China.
He was funny. Yeah, I don't want to go to Beijing, and nor do I want to go to Mongolia or North Korea or wherever he said he didn't want to go to.
I know, but it's it's the optics of it that, hey, we're not going to sit here and take these punches and not, we do have some standing in the world. So, and there's other people who feel that way too. When I first read the Pompeo comments about the sanctions on the pipeline, I misread them, so I had to go back and rethink that. But people are searching for alternatives. Yes, and I know about the dollar funding, but keep doing this, and your people will seek alternatives. But I am still amazed at how the Euro Swiss turned today. I really am. Really flabbergasted.
Yeah, that was a big move. And Northrop Grumman looks pretty good too. I don't know how much farther that goes, but all those are bouncing.
Hell, Wall Street, nothing Wall Street loves more than defense spending. Country Joe and the Fish, it's war, a go. There's plenty of good money to be made. Supplying the army with the tool of its. Oh, I'm sorry. I'm showing my age.
Oh, was that Country Joe?
So if you start talking about guns and butter, then you might start showing your age.
Well, that's why. Who was I? Who? Oh, with Andrew Perry, we were talking about Aiken, and then I gave James Aiken that button that I found anti-inflationist for Ford, 1976 election campaign.
I don't know. Somewhere ahead, in our future, we'll probably see 1970s all over again.
Well, you know what, Angelo? But when you say guns and butter, to me, MMT, modern monetary theory, is absolutely nothing more than Johnson's guns or butter.
Yeah.
Because Johnson wasn't having any of it. He wanted both.
It's just gonna be a different process this time, because back then it was a fully employed economy with war spending on top of it.
That's right. That's right. And no taxes, because don't forget the issue was, okay, if you're going to do this, you better raise taxes. Johnson wasn't having any of that. So you know what? He got guns and butter, which is what MMT. That's why I'm opposed to MMT for several reasons. But my main reason is that it allows countries to make war and never pay a price until you inflate your way into oblivion, which is the history of the world, by the way. That's what empires do. That's what powerful nations do. They overspend on military and they have to finance it. And so sometimes they used to clip gold coins, silver coins, but that's inflation and debasement of the currency by any other standard. And that's where they'll go. So the government should never have that much financial latitude, because then you could do it all. And I want, before you go into a war, if you've lost the physical oversight, you now live in an authoritarian realm. End of story. You may as well start holding parades with giant missiles coming down, the mall in Washington, and I can picture Trump, all of a sudden having a military outfit made filled with gold, where all these ribbons. I can picture now.
Yeah, all across his belly.
And he's not the only one. Believe me.
There's a bunch of them.
It could be on either side of the aisle. But once you lose, and that's what happened in Vietnam. Congress bowed to the master negotiator, Lyndon Johnson, and they got bought off, and that was it. The liberals got bought off with the war on poverty, and they voted for all the military. And the military got bought off with massive contracts for the military-industrial complex, and so they were willing to go along. And that's how you got guns and butter.
So Ira, this takes us right back to January of 2019, when Pump 'em Up Powell woke up, realized that his job wasn't maximum employment and price stability. He woke up and realized, holy crap, my job is to fulfill the machinations of the U.S. government.
Well, I don't know if I'd go. That wasn't his.
Because that, in my opinion, that really, I think we'll look back and say to ourselves, that was the moment that he lost control.
Oh, no, I agree. It's the moment he lost control, because the markets realized they owned him, just like they realized they owned Bernanke in May of 2013 and June with the, with the taper tantrum. They knew they owned him. I will be right back.
Angelo, Robert, do you know if the Wells Fargo has a trading desks like Goldman and JP Morgan?
It's a fraction of the size.
And the regional banks have nothing, right?
I mean, no. The regional banks are definitely tethered to the U.S. economy.
Yep. Okay. Yeah, that's what I thought. That's why
But some do it better than others.
Increase in the trading, it's for big boys. The rest of the banking industry, that's not their revenue stream.
Yeah, no, it was FICC trading, FICC, that gave J.P. Morgan the beat on top line revenues. That was it. Otherwise, their commercial banking, consumer banking side sucked.
Here, Steve just put in something here. He said regional banks do have trading desks, but they are very small.
Yeah, they're tiny.
Plus, they don't see the flow that the big guys do, because the big guys like Goldman they were doing prime, they had the prime business for all the hedge funds. So they saw the flow. That's why Hank Greenberg at AIG hosted everybody, because they knew every order in the world. In FX, in bonds, in equities, everything. That's why with that trading room in Greenwich, during that heyday in the 90s, they were unbelievable. You call up that desk to do a trade? Oh, you don't want to do that. No, you don't want to do that. And you know what? You didn't do it, because if you did it, you got ripped. They knew where everything was.
I'm back. Where were we at?
Well, Steven's here, and he was just talking about the regional banks, and they have small trading desks. And I was just saying that, they don't have the vision that, like Goldman with the prime business, or AIG in the 90s, where Hank Greenberg had all the prime brokerage business, and he saw they had every order worldwide. So they knew what the book was, and they knew if you call that desk, they tell you, oh, you don't want to do that trade.
Yeah.
You don't want to do that. Okay. Well, I guess I can get.
We'll wait for Andrew to come out and answer that. I speak to that. People get upset because I'm strongly opinionated on that.
Yeah, well, that's okay. Andrew's probably asleep right now.
I was on the other side of that. I was subservient to it. So, but it certainly went on, and careers were made by being able to get a peek, first look.
Oh yeah, I mean they.
Forget it. Forget it. Leave it.
Okay, I'll leave.
Leave it, because it won't go anywhere.
Yeah, let's just say we saw the movie and we know how it works.
Yeah.
All right. Well, Judd, Merv is not happy now because Ireland's just postponed the opening of pubs and restaurants.
Oh, he's got to be suicidal. Well, here, Phillips is starting to pick up a couple of the energy names. I'm out of ideas other than the fact that Deere's still going, and the industrial names are still outperforming.
Oh, you know what? This will be the last thing, and you guys can all pipe in, because I know you talked about it yet or this morning. When Biden threw down the gauntlet with that proposal for $2 trillion infrastructure spend program, which I thought was pretty. I just took around. Yep. So that was really an intelligent move. He co-opted of course, AOC and a few others when they put forth that green initiative, or the Green New Deal as they originally called it. So he picked up on that. It's a monster program. Trump will have to answer it. Have to. And then they're going to figure out, how much money they've burnt doing nothing. And that's going to be a negative for him, I think, for Trump, because this is what he should have been proposing long before Biden put it out there, because it was made for him. It was made for him, build a bit. What was that guy's name on the Gary Gnu show when the kids were little? Builder Beaver, or that's Trump, Builder Beaver.
Bob the Builder?
No, it was Builder Beaver. It was what was the name of that giraffe? Yeah, I had kids, okay, so I watched this stuff. What can I tell you? But that's Trump. They should have put him in a pair of striped overalls with a construction hat on and put him out there. And he should have been proposing this, 3 months ago. Once the unemployment numbers started to jump and go, okay, here's the way we're in front of. But Biden got out there with it, and that was also another positive for the equity markets. But they had already run very far ahead of themselves. Must have been some people in the inside circle of the Democrats who were getting long copper in front of that. Because if you go to a green infrastructure build out, copper is huge. From those windmills to a resuscitation of the grid to roads, bridges, copper will be big. And then you build out the rural internet system. I mean, there's a lot to be done in this country, and they should have been out ahead of it. But Biden was interesting yesterday, and it's not something that I find being interesting. It's not a phrase I use, and it has nothing to do with him running for president now. I can go back a lot of years with Joe Biden, and he's been anything but interesting in my opinion. But that's not a political statement. That's just a fact. He's an old line. He's an old line Democrat. If he was in Chicago, he would have been an alderman, and that would have been the end of it. What did Alexander just put up about oil? Oh, we're getting a boost. Yeah, good.
Well, oh yeah, it just jumped. Yeah, they're buying Phillips. They're buying what is Pioneer doing? Schlumberger, all those things were still strong pretty much all morning.
Well, as we talk green, they bid up the.
They bid up dirty oil.
So much for that. No, but and again, I marvel. There's a lot of stuff on this board, and of course, we get the ECB tomorrow. Maybe I'll jump in after we hear from Lagarde. And I'm not looking for anything from her except to basically say how pleased she is with the way things are going, that she's getting coordination. In fact, if you read the piece that I cited by David Marsh, he gives Lagarde a lot of credit, and it was interesting to hear that. So I hope everybody's trading well. I think these markets are providing unbelievably robust opportunities both ways.
Oh, you get your shots both ways every day, whatever you want.
Exactly. I'm waiting for some correction in the currencies. Those, of course, are a little more reticent, but they really have performed very well for everything we've talked about for weeks and weeks already. So you might you be cautious tomorrow because if the ECB were to surprise the market by increasing something, the euro will get hit hard, but I would use it as an opportunity to buy it. So I hope that they do something, but I don't believe that they will.
Yeah, so then you're into that like Wednesday, Thursday dance. So you're trying to figure out what's going to be the retest low for the week.
Right.
And last week we had that low in the S&Ps where we weren't really looking for that lower low, and then we got it, and then we got the rally.
Well, I would love to see a 70 or 80 tick break in the euro and take us down to the 200-week moving average. Be a great retest for me.
Yeah.
So I will have my wish orders in case, when the market gets a little sloppy during her press conference.
All right.
Europe's going to have to figure out what to do with their banks. They have to. I mean, they've just, look at Deutsche Bank's over $10. Woo! Yeah. So they do have to, that'll be interesting to see if they can. But that would mean rolling back some of the negative interest rates. I don't see any other way around that. So
And Germany's been strong against the S&Ps all morning.
yeah,
Okay.
yes. You know, and that's in spite of everywhere I go, everybody, oh, you're so wrong. It's a basket case. We know that. That's not new news. Europe's been a basket case, but I'll go back to May 24th, 25th. That's all. That is all. But okay. Any further questions before I hightail it out of here?
No, we're good.
All right.
Thanks.
Good. You guys did some great work. I know because I follow along with Judd. So good trading and good opportunities.
All right. Thanks, guys.